Good morning, everyone, and welcome back to yet another session of Let's Talk Business. Again, I'm really excited to interact with you because this platform provides me to explain how things works in the London bureau market. Once again, I'm really thankful for all your queries and suggestions. I try my level best to respond to your queries, but due to time constraints, sometimes I'm not able to respond all of your queries. But soon I will address those queries in another forthcoming sessions. So thank you once again for your support and your queries, and I really appreciate the way you are supporting this channel. So let's begin. So in this series and in this particular episode of this series, we are going to talk about the London market claim processing and associated messages as we have planned. But before getting into that, let me recapitulate what we have discussed so far. So far we have discussed the Lloyd's of London introduction, and then we discuss about its business processes, what are the various business processes which is within the Lloyd's of London and the London bureau market. And then currently we are studying the London bureau market messages. Within the London bureau market messages, so far we have covered the London market structure, we have covered the history and overview, we have covered the various message type. Then we also touched the infrastructure which is related to messaging within the bureau market, which covers the ACORD for all and XAG, XDH and DMEL, which is the Messaging Exchange Limited. And then we have also covered the individual messages. We see how those messages look like. And then we have covered the business processes with upfront premium paid by broker, and business processes with the dealing premium, where the broker has not yet received the premium upfront from the customer. Now in this session, I'm planning to cover the London bureau market claim process along with some brief background about the ACORD and Ruschlikon messages. In this session, I'll try to give the background about the various type of messages within the London bureau market. And then in the forthcoming session, I will try to cover the class system, the ECF system and ECF2 system, which are some of the major system in London bureau market, along with and POSH system. So this is the plan. Then going forward, once we are done with our London bureau market messages, I will get into the TOM program. And in the TOM program, as I said earlier, we will try to see how the structured data capture work and how the placement platform limited work, and then delegate authority, which we also call as DA sets. Then we will also see how the CSRP and post-bind submission works. So we have lots to cover in forthcoming sessions. So I will encourage you to stay with this channel to have the idea about what are the various modernization activities are happening within the London bureau market and London market as a whole. Now, once again, for those who are new to my channel, let me introduce myself. I am Ravi Shankar. I am having more than 14 years of experience in business analysis. I'm working as a business analyst. I'm largely associated with PNC, General Insurance, and right now I'm practicing in Lloyd's of London. As I said earlier, for all of your queries, you can reach me at ravi.s.sharma@hotmail.com, or you can drop me message in LinkedIn by accessing my profile at linkedin.com/in/Ravi S. Sharma. So let's begin. So first of all, let's see Lloyd's bureau market claim processes. This is what our area of focus for today's discussion. We'll see what are the various aspects within the Lloyd's bureau market related to the claim processes. So first of all, let's see how the simple claim process look like within the Lloyd's market, and then we will delineate further down and see what are the various minute aspect of claim processes within the London market and London bureau market, which includes Lloyd's, ILU and LIRMA. So it starts with insured. insured intimating claim to broker in event of loss, then what happens? The broker prepares the necessary claim file. In London market, the claim file is the file which contains all the claim related information, and the broker present this claim file to the underwriter, and underwriter will evaluate the claim and all the associated information according to the agreement, which is AMRC, market reform contract, which we discussed in our previous slide. If you are not aware about this MRC, then I will recommend you to go back and see my previous slide. And then once the underwriter is done with the assessment, then it will present the case to XIS, which is Exchanging Insured Services, in order to process the claim and settle the claim within the system. So this is the overall process. This is the overall broad process. Then we will see how this process works, in a greater detail in the following slides. Now, how the claim reported to the market. As I said earlier, the insured, which is suffering from the loss, will intimate the claim to broker, and by this time we know that the broker is a guy who play a central role in the London bureau market, and this is the guy who will be associated with the contract life cycle or policy life cycle from cradle to grave. Then the broker will assimilate all the claims details, and then it will either log the claim into the electronic system, which is called as the ECF, or for up to some extent for the larger and complex claim, the broker will discuss face to face with underwriter about the complexity of the claim. And then what will happen, ultimately the underwriter, if they feel, they will assign the adjuster, and the adjuster will evaluate the claim and see what are the various reasons behind the claim, and it will try to establish whether all the terms and conditions within the MRC is satisfied or not. So let's quickly catch up the few points. Broker present the claim file to the leader. The first intimation of loss is called first advice. First advice in London market. In US, it's called as a FNOL, first notice of loss. But in London market, it is called as first advice. In US, it's called as a FNOL. For those who are practicing in US, they are aware about this term, FNOL. And in India, it's called as a claim intimation. Then initiate the claim reserve advice, or maybe kept as a TBA. So what will happen if they are aware about what could be the total claim amount, they can put the estimated claim amount, or if they are not having, or if they are not able to reach to the conclusion that what should be the estimated claim amount, then they will put it as a TBA to be decided later. Then claim adjuster validate the claim according to MRC, which I said just now, MRC condition, and the loss adjuster can appoint external loss adjuster depending on the nature of claim on behalf of followers. So what happens if the loss adjuster is not able to validate the claim fully due to the complexity involved, the loss adjuster can also appoint the external loss adjuster, and the cost of the external loss adjuster will be borne by all the leader and the followers for the contract. Then loss adjuster are paid by the carrier of the risk. So why they are paid by the carrier? Because they represent the carrier, and the carriers are using their services. So so this is how it works. So what will happen? The loss adjuster during the assessment process, they talk a lot with the broker in terms of understanding the various understanding about the MRC and other terms and conditions within the contract. And broker and loss adjuster interact up to a greater extent before arriving to the final conclusion. And once everything is over, and once everything is established, once the adjuster established that the claim is valid and the amount which need to be paid, then the broker present the case to XIS, and XIS will do all the bureau processing, and then ultimately it will send the information to carrier to record in their system, in their policy administration system or claim administration system. Let's look at the quick highlight of this process. The underwriter must wait for all the claim related queries to be resolved before accepting the first advice. Yes, so there are a few variation in ILU and LIRMA, which we will see in later slide, that whether the underwriter or lead has to be accepted the advice first or not. So we will see the variation in this step. The settlement of claim depend on the claim scheme in MRC and bureau, basically in MRC, not bureau. So MRC is the first document which covers all the term condition, of the policy. When the first advice is approved and agreed, the information is then captured in XIS system by XIS, and then the XIS system will then send the claim information to carrier to manage the claim properly with the help of LIMCLM messages and SCM messages in terms of Lloyd's. We will see this messages further down when we discuss about claim process in this episode. So what happened? Let's basic claim cycle here. It covers. It may be having a different subcycles, but largely it is having a first advice, which is the first stage, then subsequent advice. If there are certain movements in, or if there are changes in reserve or changes in claim property, then you have a subsequent advices. Then you have a final claim settlement after investigation. Then you will close the claim, and if required, you can reopen the claim. So this is a very typical claim life cycle, which you can see anywhere. It's not specific to Lloyd's. It's a typical claim life cycle, but something like first advice and the subsequent advice. This is a terminology largely used within the London Bureau market. So let's see the quick point over here. All the changes in the claim must be captured in the subsequent advice or movements, which we also call a movement, and send it to the carrier to update their system. We will see when we talk about the Lloyd's claim processes, we will see how the syndicate claim messages, which we also call SCM, initial SCM, and then subsequent SCM, and what are the information the subsequent SCM carries, and then why it is called as a subsequent SCM. So we will see about all those things in the subsequent slide. And the subsequent movement can be classified into two types, which is non-settlement movement or advice, and the payment movement, or also called a settlement advice. So what happened in terms of the non-settlement movement or advice, which carries the updated information about the claim in terms of reserve, the last advice will update the latest advice. Basically what I'm trying to say that every time when we get a subsequent SCM advice or subsequent movement, it will update the last movement. Say for example, last time the reserve was $50,000 or pound, and in the current movement it reduced to 25,000 pounds, then the 5,000 pound will be updated as the latest position in the claim. Then you also have a payment movement, or also called as a settlement advice, which carries the detail about what has been already paid to date or previously settled, but not carrying the payment even if there is one. So these are the variation in the payment movement. Largely covers when the payment happened or what are the payment made to the claim so far. Then what happened? Then you have a closing advice, which will advise to close the claim, and some carriers also set up the. So these are the up to the advice. Then so what happens? Sometimes the loss is big enough that you have to segregate the loss into two parts, into the indemnity losses and the expense losses. So sometimes what happens that in Lloyd's or London Bureau market, a carrier also set up the fee, which is expense claim, along with the indemnity claim, just to manage the fees when it comes to the large claim. And it is totally depending on the carrier how they are managing this claim. This is not the norm. It's depending on the carrier to carrier whether they want to set up the expense claim or fees claim or indemnity claim separately. But it is always good to set up this two type of claims so that they can manage their claim message movement easily. It should not be like the expense is blocking the indemnity payment. So they want to be, they want to keep both of them separately. Now, before getting into the claim process, let me do a quick recap on the settlement also. Settlement. So within the London Bureau market setup, broker, syndicate or company will use the services of XIS, which is a part of the DXC technology in terms of facilitating the central settlement. Okay. So in the central settlement, all the parties, for example, brokers, company, syndicate, have their bank account recorded with XIS, which is used to receive the premium from broker and make the payment to broker against the claim settlement. So XIS hold all the banking information of broker, companies and syndicates, and they will put the premium into their banking account, or they will take the premium from their banking account because they have all the information with them. Once the premium or claim process is complete, XIS will send the detail to STFO, which is Settlement Trust Fund Office, or LPSO in terms of company market, to net out the premium and claim and move the money between the accounts. We will see this process, and details of settlement will be provided by email or messages to all the parties involved. Within the company market, LIPS, LIPS, which is stand for London Processing Center Irrecoverable Payment System. So RBS is basically responsible to do a settlement within the London market when we talk about the company bureau. So the claim settlement process within the Lloyd's. So how the claim settlement process look like within the Lloyd's, we will see into a nice swim lane diagram. So again, here the parties are involved: broker, which plays a central role; the syndicate, which we also called as a underwriters. Then we have a XCS, and then we have a settlement trust fund office, which act as a central office to settle all the monetary movement. So the process starts with the broker. The insured approach the broker for the claim payment, and broker will create the claim electronic into the class system. We will talk about the class in the next presentation, not within this presentation, but in the next presentation. But class is one of the major system used by the broker and syndicate in order to manage the claims. The lead syndicate will review the claim electronically in ECF, electronic claim file system. So ECF is another system which is provided to syndicate in order to review the claim, and ECF is getting the information from class system. Then lead system can assign the claim to another system based on the claim scheme. Now what is this claim scheme? So claim scheme guides that how the claim is managed between the leader and the follower, which means that, say for example, in certain claim, the claim scheme says that in a particular incidence, the leader must appoint the second leader also in order to approve the claim. Okay, so all this claim scheme and conditions are covered in MRC during the contract negotiation. Okay, then broker will receive the intimation. Say for example, if the syndicate decided to assign the claim to the second lead, then broker will receive the intimation about the lead agreement, because the main lead has already agreed, but it has also assigned the same claim to the second party appointed by lead. And then the broker, because broker plays a central role from cradle to grave, he will be having the eye on all the movement which is happening within this stage, because sometime what happened, the syndicate need to have understanding on certain aspect of the claim, and he may raise the question to broker, and broker has to provide the justification promptly in order to settle the claim quickly. Then once all the parties agreed, then the claim will be presented to XIS for technical processing, for XCS for technical processing. XCS stands for Exchanging Claim Services. And once the processing is done, the signing number and date is allocated by XCS to that particular claim, and the information is then pushed into the LID system, LIDS, London Insurance Data System. That trigger the processing of central settlement by the STFO, and XCS system will feed the XIS LIDS system with all the claim detail, and XIS will then send the messages next morning. So what happened once the XCS is done with all the processing over here, it will send the information to XIS LID system, which is the main system which carries all the information about the claim, and this LID system later on generate the messages, SCM messages, along with other messages like USM, WSET, USM, UWRSETT, etc. in the next morning. So generally what happened, by end of day processing, which is 7 p.m., all the systems shut down and the data is pumped from XCS to XIS LID system, and in the next day LID system generate the SCM message and will send to syndicate, and the syndicate will consume this SCM messages and then record this SCM message into their system for further processing. So what happened when the entire thing is done, then this information will pass to STFO, and STFO, which is stand for Settlement Trust Fund Office, will facilitate the automatic net settlement based on the SWIFT received by the XCS. So what happened, the XCS will also generate the SWIFT file, XIS will generate the SWIFT file, and then it will send the SWIFT file to all the participating bank in form of debit note, and the bank is then confirmed that their customers or client can honor the payment. The system will then send the SWIFT file, and the real monetary transaction will happen. The money will exchange the account. So let's see the quick point from this process. The claim scheme guides how the claim is managed between the leader and follower, which we saw. The claim scheme is already captured in MRC during the contract negotiation. Broker must settle all the queries because he is playing the central role. He must be settling all the queries so that the claim can be resolved as soon as possible. The XIS can perform the role of lead or second lead syndicate in claim if the syndicate elect SCS to perform the services on behalf of them, and it's called as a XCS elective service. Syndicate allocate their claim adjustment services or claim processing services to XCS, or you can also say that they outsource the claim processing to XCS, and when they are using the XCS services, we call those services as the XCS elective services, claim elective services. Then SWIFT message will send to be sent to STFO for actual debit or credit transaction. No, so the SWIFT message will be generated, and the STFO will send the messages to the bank, the SWIFT message to the bank in order to do the actual money transaction. But before sending the SWIFT message, the STFO will first send the debit note to the bank, and the bank will confirm that their client can honor the payment. And then once the confirmation is done and received by STFO, then STFO will send the SWIFT file back to the bank, and the bank will actually do the transaction and the money will change the account, as I said earlier. Now moving next to the ILU claim process, which is I can say 80% same as the Lloyd's bureau claim process, but we will see what are the differences over here. Again, the party involved here is broker, the company carriers, the XIS over here, and LPSO. The insured approach the broker for claim payment, and broker will create the electronic claim in class system. The lead will review the claim and assign the claim to second lead based on the scheme we discussed earlier. The first advice required lead only agreement before the movement is complete. We will come back to it in a moment. Once all the party agree, then the claim will be presented to XIS for technical processing, not XCS, XIS for the technical processing. Once the processing is done, the signing number and date will be allocated. Then the data will push into the POS system, and all the information will be updated into the POS system. If you remember, The POS system is the system which carries the data for all the company market bureaus, which include ILU and LIRMA, and POS stand for policy signing history. Then once everything is done, then LPSO in company market will facilitate the netted settlement with the help of RBS. Now let's have a quick points from this process. The claim scheme guides how the claim is managed between the leaders and followers, which we know already. The claim payment may require lead or second lead to approve the settlement of payment based on the claim scheme. However, the first advice will require lead only agreement before agreeing the claim, and if the risk is placed between the Lloyd's, ILU and LIRMA, then the broker must create the claim various versions, the same claim with various versions, one for Lloyd's, one for ILU and one for LIMRA. So for one claim he will create 3 variations for Lloyd's, LIRMA and ILU. Now why I made this particular point in red is because this is the only difference between the Lloyd's and the ILU process. So here the first advice required only the lead agreement, which is not there in the Lloyd's system. Here it required only the lead agreement before it is getting released to the other followers. First lead will review the claim and will satisfied with the claim, and then it will approve and agree. So this is the one of the key difference between the Lloyd's and the ILU claim process. Going forward, how the process look like in the LIRMA bureau. Again, the process is same with some differences which we'll see. The insured approach to broker when the claim happen, and the broker will create the claim in the class system, which we know. The lead in LIRMA company has 2 actions to perform. This is the difference. It will circulate the claim movement, which will be generate the message, and then it will agree the claim settlement for their own share of risk. So first it will trigger the claim movement, and then it will agree for his share of business. Then so what will happen in this case? Say for example, if 3 persons are involved, if 3 participants are involved or followers are involved along with leads, so everybody is having a greater level of control in their monetary movement. So everybody can able to authorize their own claim, or they can also think that okay, let's wait and see when the other people are, when the other followers are agreeing about the claim. So they can immediately start their own settlement, or they can also wait for others so that they can have a combined settlement. So this is also one of the difference. If the settlement is immediate, then the claim will be presented to XIS for technical processing, just like a normal process. Once the processing is done, the signing number and date will be allocated, and it will trigger the central settlement only for this company or this follower. Say for example, if the second follower has agreed and he okay to make the payment, then the SAND will be assigned, and the payment will be triggered for his portion of loss, not for others. So in this case, broker will receive many payments. One payment from one participant, another payment for another participant. It's not like one combined payment from all the participants. Then the information will get into the POS system to get recorded, and the next morning the POS system will generate the messages and the settlement and those messages. Then after 3 days, as explained in the earlier slide, the 3 days LPSA will trigger the central settlement, and the central settlement in the company market is facilitated by RBS. Let's have a quick review on the key points over here. The slip leader might have a special role in terms of negotiating and adjusting the claim. Here, the slip leader will see the claim movement first and agree its circulation to rest of the LIMRA companies. That is another difference. No one company authorized payment on behalf of other companies. So say for example in Lloyd's and in ILU, if the lead agrees, then other will follow. But in this, as I said earlier, in LIRMA, all the followers are having a greater control on their monetary movement. The LIRMA companies are having full financial control on their cash flows just now. Each company will respond individually to the settlement. They can, or they can wait for all the companies to respond, but they can respond individually. If they're waiting for the other company's approval, then after 5 days of S&D will allocate the settlement and process will be triggered, and the broker will receive the multiple payment because everybody is approving their own payments. So these are the good scenarios or the simple process within the Lloyd's, ILU and LIRMA with respect to the claim settlement. Now let's have a quick message recap, because the other slide where I'm going to explain what message is getting triggered within the claim process, it is what I think it is important to have a quick recap to understand what are the various message type within the London Bureau market. So the first message is ACORD message, and ACORD stand for Association for Cooperative Operation Research and Development. They are having office in US and well established office in UK and other part of globe. They set the global standard for insurance data exchange between the systems to reduce the frictional cost, and they maintain the standard for global insurance industries. Say for example, for US, they maintain the standards, the message standard for life and annuity, property and casualty. For UK, they are having a program called ACORD GLRC, which stands for Global Reinsurance and Large Commercial. Within the GLRC program, they have a placing message type for underwriting. They have accounting and settlement message type. Within this, they have a technical account message type and financial account message type, and then they have a claim message type. Within the claim message type, they have a claim moment type, bureau message type, or tax and regulatory reporting message type. So these are the message type within the ACORD GLRC message, which is applicable for UK. And for Australia, they are having a ACORD message library, which they also call as the AML. But we are more focused about ACORD here, because these all the modernization activities within the Lloyd's are around the ACORD messages. So ACORD messages are playing a very important role within the modernization activity within the Lloyd's. Then the second message type is called electronic data interchange messages. The electronic data interchange message within the London Market Bureau setup is EDI effect message. EDI effect stand for electronic data interchange for administration, commerce and transport. The EDI effect is accepted as an international EDI standard that has been adopted by organization who is wishing to trade in a global context. Initially this is the message standard for exchanging the information between the systems. A standard set of syntax rule has been developed by the United Nations in late 1980s for EDI effect. London insurance market adopted the use of EDI effect as a means of transferring the data between the parties involved in the insurance contract. So they adopted this EDI effect standards, whose rules was first made by United Nations in 1980s. The EDI standard in London market was developed under the sponsorship of LIMNET. The LIMNET stand for London Insurance Market Network. These message standards are managed by XIS nowadays, and XIS, which stand for Exchanging Insurance Services, is a part of the DXC technologies. And this old message was initially focused for mainframe and mini computers, but now their popularity is decreasing day by day, because all the modern systems are expecting messages to be delivered in a more advanced XML form, and they keep the code as a basic standard for data interchange or exchange. Then coming back to the two main infrastructure behind the messages, which we called as XDH and XAG. We have discussed about this in a previous presentation, but let me give you a quick background about it. The XDH stand for Exchanging Distribution Hub, make it easier to move the data between the business partner. There are around 200 connecting organizations in 14 countries with all the London market brokers and companies attached to the hub. Everything within the London market is attached to this hub, typically used for the broker submitted electronic account messages. So this is used for the electronic messages submission, and then this hub will distribute the messages to the various participating companies or bureaus within the London market. Then the other piece of infrastructure is called XAG, stand for Exchanging Accord Gateway, typically used for distribution of broker and underwriter EDI messages and accord messages. With this XAG, you can distribute EDI and accord messages. The new gateway services means that the London Electronic Data Interchange EDI file can now be delivered in accord format over the accord message services. So last time when we are discussing about this, I talked about the Accord for All program, which is developed by XIS. With this program, the XIS can able to convert the old EDI message to the Accord GLRC messages, and it will send it to all the participants. So it will help carriers to lower down the cost. What happens? Sometimes carrier system is not capable of addressing or managing the EDI message. So Accord for All generate the EDI or convert the EDI message to Accord message, and it will send to the carrier, and carrier will accept the message. So by this way, it is very easier for carrier to accept those messages without changing their system. Now, with one global gateway simplifying the data delivery and removing the London barrier of trading this, an important move toward the future goal processing. So London historically is having a very close processes, which sometimes is also referred as Londonism, and which sometimes prevent the global market to interact with London. But with the help of XAG, London market open its gates to the global market to exchange the information freely. So XAG is helping to remove those barriers and making London market more accessible to the global players. Now quickly get back to the message type. When it comes to the Accord EDI messages, we have USM, which stand for underwriting signing messages. Then we are having a UWRSETT, underwriting settlement messages, MCM, monthly control messages, SCM, syndicate claim messages, we will talk about it, and LLOYD'S messages, which stand for LLOYD'S outward reinsurance system, scheme messages, and broker signing messages. So I have discussed about these messages in our previous presentation. If you are not aware about this message, then I'll highly recommend you to go back to the previous slide or previous presentation and have a good look. Then we have a messages type for LIRMA and ILU. For the LIRMA message type, we have IPC DSM, DSign, WSETT, and LIMCLM messages. And the similar messages in ILU is IPC CSM, ILU CSM, and ILU CSB, including LIMCLM. So again, if you are not aware about this message, I will encourage you to go back to my previous presentation, see what are these messages all about. Now there was another message type called Ruschlikon. Ruschlikon, by the way, is a small town in Switzerland. What this Ruschlikon message type is all about? In 2012, LMG, which is London Market Group, implemented Ruschlikon message to provide standard data interchange between non-bureau insurance company. Remember, it's non-bureau insurance company. It's not bureau companies. Lloyd's is not for ILU or LIRMA. It is for non-bureau insurance companies. This initiative is driven by a global insurance and reinsurance player like Aon, JLT, Willis, etc. It uses two key accord message standard, EBOT and ECOT. EBOT stands for electronic back office transaction for premium processing. And you have two flavors within the ECOT, which is called technical account and the financial account. Then when it comes to ECOT, which stands for electronic claim office transaction for claim processing, they are having a two standards over here, which is called as the claim moment messages and financial accounting messages. Okay, so as you see over here, Ruschlikon is powered by Accord, and Ruschlikon is there in the London market. So Ruschlikon messages are following the GLRC message standard, which stands for Accord Global Reinsurance and large commercials messages. So now let's see claim settlement messages in the Lloyd's Bureau. The process remains the same, absolutely the same process. We have broker, we have syndicate, XES and STFO, and then the entire thing what I have explained you earlier. But when it comes to messages, so first message come here is a LIMCLM message. I will explain you in a while. And then you have a SCM, USM and WRSETT. Let's have a quick look at the key point over here. The broker creates the UCR, which stands for unique claim reference. If the broker is using his own software to create the UCR, like many like Aon is using exchanging broker short system, then LIMCLM messages will be generated from broker system, and these messages will send to the class system to consume. So broker is having an option to create claim directly into the class system, or it will create the claim in their own system like broker short system, and then generate the LIMCLM message and send it to the class system, and then class system will consume this message and create the claim. Okay, so there's another way of creating the claim. Then a very small percentage of claim within the Lloyd's is also managed on the paper, and we call this claim as a paper claim. And they use the LCCF, which is London Claim Collection Form, agreed outside the class and the ECF system, and upon the completion presented to XCS technician for full entry in class system. So what happens, these paper claims will be absolutely outside the class or ECF system. And what happens when the claim is agreed and all the parties, all the followers and leads are agreed on the claim, then the entire claim file, the paper claim file, will be presented to XCS, and the XCS will capture all the information into the class system once again. It's not updating the information, it is capturing the information from the scratch, and then it will generate the message and follow the normal process, which includes generating the messages, sending the information to STFO and settling the claim. Now here we know about the LIMCLM message. When the broker system is sending message to the class system, the message is largely a LIMCLM message. But what will happen? So what will happen when the XCS is done with all the information and the information is passed to the XIS lead system? The lead system will generate the syndicate claim message, which include the moment and the reserve and the information about the claim. And once the claim is settled, the final information comes in the USM message, and then it also generates the UWRSETT message along with the other message type. So it is not like the system is generating one type of message at a time. So what happened, as I explained you earlier, at the evening around 7 o'clock, when all systems shut down for the final processing, the lead system will generate all type of messages, which including USM, SCM, UWRSETT and everything, MCM, and it will send to all the parties. So when I say that it is SCM or USM, it's not like only SCM and USM message for the claim. It's every message. But then all the parties which is expecting the SCM, they will pick up the SCM. In fact, all the messages, but they will pick up the SCM and then update their information. So these are the messages which is getting triggered at the time when the lead system has processed all the information. And now in terms of ILU, the process remains same, which we have already discussed, but let's see the key points over here. Broker create the UCR, which stands for unique claim reference, which help the various parties to track down the claim. If all the bureaus involved in the claim, then broker will replicate the same UCR for 3 bureaus, as explained earlier. So sometime what happened, the particular risk is placed in Lloyd's, in ILU and in LIRMA, and if the claim arises, then the broker will create 3 variations or 3 versions of the same claim for Lloyd's, ILU and LIRMA. If the broker is creating the claim movement directly in the class for the 3 bureaus, then there is a copy functionality available in the class portal to copy the data 3 times. So in the class system, in the next presentation, we'll talk about the class system. But in the class system, in order to reduce the workload on the broker, They have a functionality to copy the claim for Lloyd's, ILU, and LIRMA. But of course, they have to add a few additional information which is specific to that particular bureau. If the broker is using one software to create the UCR, then the LIMCLM message will be generated from the broker system for the class system to consume. And we know this. So if the broker is using, say for example, if anyone is using the broker show system, then the broker show system will generate the LIMCLM message, and the LIMCLM message will then send to class system in order to get consumed within the class system. So that's it. So let's see the message over here. The LIMCLM message is the first message if the broker is using their own system. And then you have the other message called LIMCLM and the ILUCSB, which is a settlement, and LIMCLM is the movement messages, along with the other messages which I already discussed. Say for example, if you're discussing about this, then we have IPC DSM, IPC CCM, then we have ILUCSM, ILUCSB, LIMCLM message. So system will generate all the messages, but since we are talking about the claim messages, I mentioned about LIMCLM and the ILUCSB, which is a settlement message, and the LIMCLM stand for the claim movement messages. The rest of the process remains same. Now let's see how the message look like in the LIRMA bureau. The process remains same. What you have is the LIMCLM and WSETT messages along with IPC DSM, D-sign messages, etc. So they generate all the messages. Because we are talking about the claim, I mentioned LIMCLM and WSETT. Let's have a quick look on the key point from this process. The broker create the UCR. We know this. We also know that the broker has to create 3 variations of the claim if all the 3 bureaus are involved. Claim class is having a functionality to copy the claim 3 times, and LIMCLM message will be generated from the broker system to integrate with the class system. So these are the claim processes with London Market bureau setup, insurance bureau setup. So that's the end of this session. I hope you can have a clear understanding, or maybe a high level understanding about how the claim is managed within the 3 bureaus, Lloyd's, ILU, and LIRMA. Once again, I have used many different terminologies, acronym within this presentation. If you are not familiar with those terminology and acronym, then I'll appreciate you to go back to my previous presentation and understand what those acronym are all about, and it will also help you to understand and fully appreciate this presentation. So I'll highly encourage you to go back and see my previous presentation and get benefited out of it. So that's all from this presentation. I hope you have enjoyed this presentation, and I'll get back London Market systems, which include LIDS, POSH, class, ECF, and ECF2 system, and we'll see how this system interact. It's going to be a very interesting discussion once again. Again, I would like to thank you everyone who is sending me messages and appreciating the effort. Once again, my idea is to create a platform where we can share the information. I'm sharing the information about the London market. Say for example, if you have more information, then I'll encourage you to put a comment, explain the process so that other people can also get benefited from your knowledge. So I covered the high level processes, but what you can do in the presentation, you can also put your comment and explain your understanding about the process, give more idea about the minor details about the processes, so that everybody can able to understand those things. So being said that, thanks a lot for your time and your patience. This session was slightly longer as compared to the other session, but I hope you have enjoyed this session, and thanks again, and have a great day ahead. See you soon. Bye bye.